Hello everyone. Let's take a look at trades I made today in the morning. It was a trending day in ES. Gold for me it was a little bit sideways, and it's not. It had a good big move yesterday, so I was not expecting gold to go that much farther down. Even not today, but you know, the charts are indicating that that it could go even lower. Crude, it's moving to the upside, but found some resistance. I'm talking about the daily chart. So the daily chart, it's bullish, but you know, I have been taking a little bit of hit later in the afternoon or during the day, basically. So let's review each one of them. First of all, I've had a couple of reminders. Go ahead and like this video, and also subscribe to set up the alerts so you don't miss any of the videos I make. And also as a reminder, I do trade with Apex funding, so you can find a link for Apex in the description of this video, and there's also a coupon that you can use if you want to use this this service. Really good. I have several accounts with them, so I think that it's a good way to trade. Now I also have in the description a blog, so you can go there, visit it, and if you and get some information about behavior of the market. I try to do, you know, regular posting, not doing every day. I get busy. It doesn't take me that much to do it, but so I do it, and I put you know, potential entries in terms of stocks and other things. So basically on swing trade, what I do is that one would serve me as a guidance on how to put you know, trades in options, basically options. That is mostly what I do as a swing trader. I'm not a financial advisor, so make sure that make your own decisions, and what I do here is basically for educational purposes and to share with you my personal trading strategy. So you know, do it at your own risk. Trading futures, especially futures, can be very, very risky, but also it has a lot of potential rewards. And if you have any questions, put it in the comments below of this video, and I will make sure that I address them either with a new video or with a comment to a response to the comment to it. Okay, so let's go back to business. Let me share with you what I try to. This is my guideline, and I review this every day because I'm kind of like thinking that you have to have a strategy at the beginning of the day, and so let me share this and start from here. So, you know, when I do a trading, when I face you know, the day, I always ask this first question: are we in compression or we are in expansion? And in this order. So you get you know, are we in compression? That is the first question you have to make. Are we in a range market? Is the market moving sideways? How did it move yesterday? Did it make a big move? What is the probability that the move is going to be it's going to continue during the day today? So that is my first question. I do look at the daily on the day before, the daily charts on the day before, and where are we with the bias, especially for the day. So are we compressing now, or we are expanding? Did we break this supports or resistance that would allow me to say, okay, this market is moving directionally? Now when I see that, then I start to do to paint drawings in my charts. So basically the element that I use the most is the channels. So if you paint a channel, you're going to be bullish or bearish if you are in compression. Now if you go and validate or check in your biases that you are in compression, then you have to look for parallel or parallel lines or maybe triangles. So basically you identify, and I'm going to show how I set it up. There's also a question that I'm going to address in this video, and how you establish those ranges. And I use that Fibonacci retracement tool, and I modify it a little bit, and I'm going to show today how I customize it. Okay, so then when I'm at support or resistance, depending on the bias that I have, then I start to find out what or I start to try to identify where are my setups, and if the setup triggers, I enter the trade. If it doesn't, then I don't. So basically what I use is week out of the moving averages or EMAs, or weeks out of the Ichimoku cloud. So also I do have some additional setups, like breakout of compression, which doesn't really need to have a week, or get a trend reversal. So I do have those setups there. Also failures are one of my favorites entries, and so yeah, I do have those things. So let's go back to this chart. Let me see if I'm sharing the right screen. Yes, I am. Okay, so basically I do have here the Renko charts. So this is a 4-10-20. This is my trigger chart. Okay, so I do have this one. What you do see here is the moving averages, the 200, 89, 34, and 21. So these are my moving averages, and then I use the Ichimoku cloud as well. Sometimes, and I have to tell you the truth, I get impatient and I violate my own rules, but most of the time I think that I try to follow them. So let's see here for the anchor chart. The anchor chart is twice with the entry chart, and I always put it like that. So if I use a 10-20, if I use a 4-10-20, then my anchor chart is going to be 8-20-40. If I do use a 2-5-10, I'm gonna use my anchor chart as 4-10-20. Okay, so in what I'm doing now, what I'm using now is the trigger trigger chart in 4, just because volatility is kind of like big, so I expect some bigger moves there, and the two for the 2-5-10 are a little bit more are noisier, so I want to stay in the trade. So in that way, if I go in a lower break, then it's going to make me go in and out. The risk in and out several times, or much more than the higher chart. So yeah. So okay. So let's let's do an exercise here. So I'm gonna expand another thing that I have here. I'm sorry. So this one is the point and figure chart, and I use, I do have several monitors, so I have to tell you the truth. I do have 6 monitors, and they're busy with different type of charts, and I want to show you some of them today. So this is the point and figure chart, and I'm gonna expand it to go and identify what I thought it was going to be the bias for today. Okay, so first of all, I get to trade around 8 a.m. So this one is I'm going to put this vertical line here at 8 a.m. So before that, I do sometimes sit at the computer and start looking at things, but my analysis is at 8 a.m. So what I see here, and I do have also a tick chart. So let me go here. So what I see here, I'm going to put it right there. So like that. So it's what is the market doing today? So basically that would establish my bias. So if my bias is short or it's to the downside or bearish, then what I'm gonna do is to try to put a bearish trades, because the idea is that I am going to start moving or identify moves down in the market. And so what I want to do is to sell at resistance and then buy them back at support, and in that order. Okay, so here what I saw today is that the market made a move to the upside. It didn't touch that many times overnight this EMA. This one is the 21 EMA. So let's go and look at it. I'm sorry, this is the 10 EMA, the 10 SMA. So in point and figure chart, what I use is the 10 simple moving average. Okay, so SMA 10, perfect. Okay, so I saw this big move and then started to go down. So what I do is to identify a pivot. This one is a pivot here. It moved down and then went back and then tried to move down, and then it went in a range and then moved down again, made a lower low on that one, and then a lower high from this one here. So a low, a high, a low, a higher low, kind of in a range, and then move to a lower low. So for me, that is my bias now is determined as going down. You can argue in this one, if you look at this, that there's a range here. Yes, there is a range here, but in here what I'm trying to see is my personal thing is that the bearish momentum is going to continue. So what I do is to go here. You know what, I'm gonna do something. Okay, so what I'm gonna do here is to paint, to connect these two lines here, or these two pivots here, and then go and move to either this one or that one over there. Okay, so I'm gonna go with this one. It's a little bit higher than that one, so I'm gonna connect that one there, and that is going to give me my channel. Now market opened and started to move away of this channel, but is trying to come back. So I'm looking at this during the day, but I already defined that my bias is negative. I could be wrong, but that's part of the price you have to pay, right? Now that I'm biased to the downside, now I start to look for my entries. Now, if let me show you this in a different chart. I do have the tick chart. In this case is the 1500 tick. It could be the 2000 or the 1500. That would be okay. What I'm gonna do here, and probably I have shown you this before, hopefully this thing is clear. What I'm gonna do is to go to this channel, and what I'm gonna do is to paint it in all the charts that are. Oops, I do have a problem here. I just realized, and I'm not gonna start the video. But what happened in here is that the chart is wrong. Okay, so I'm gonna put all charts, apply, and then the problem here is that I do have the June 22. The June 22 chart. It's a little bit different just because we are trying to get. So I'm gonna redraw this. Let me see if it painted somewhere else. So what I'm gonna go doing here. I'm sorry, guys. I really apologize for taking this. So yeah, it's in all charts. So you get it there in all charts. So when I bring my 1500 chart, you will see that there's a chart right there. Now that modified. So what I'm gonna do is to take this one, and to tell you the truth, I like the painting my charts. Painting the charts in the tick charts instead of the point and figure. So I always validate I always validate the tick chart with the channel. So I adjusted there. Now there's a change in here, right? So we do have this other pivot that it's also overnight, or this one here that it's also happened overnight, but the thing is that we're heading down. Okay, so now that I have my bias, I do have my channel, then I'm gonna start, going through the trades. Okay. Guys, I'm sorry if this is taking a little bit longer than expected, but okay. So again, sometimes I'm wrong, and sometimes I take trades that are not 100% in my plan or setup, or however you want to call it. But if you follow the rules, and if you try to follow the rules, and then you try to follow the law of the large numbers, then you should be okay in trading. Okay, so basically, first trade here, what do we have? Week out of the moving averages coming over the 21. It's a bearish trade, and it's above this channel I have painted here, right? So it's above. My expectation is that this one at least was going to touch this channel, or the other side of this channel. It didn't happen. Just came back down here, and I entered it one tick below this reversal week, right? It's riskier. It's a riskier trade. And once again, I am trading two contracts, and what I try to do is to respect to trigger the first target, which is in the four in this size of a break. The first target goes off at $200, and the second one goes off at $400. So and sometimes I move the second target and play with it to see if I get a little bit more money on it. So okay, so what happened in this one? It reversed on the first trade on ES. Did not continue, didn't meet the target or didn't reach the target, and then came back up. So I'm 1.8 ticks short or 1.8 ticks in a loss. So that one is $360 a loss, and I keep a registry of the trades. So let me show you that. You know, this would be, so what I do here is this little thing. Hopefully you can take advantage of this. So okay, so this is what I do have. It's a GC, and I did 2 trades in gold. Some 1 2 3 4 5 6 7 8 9 trade in ES and 3 trades in crude. So let's see. So the first 3 trades in ES were a loss, and the total of this one, if you look at here, it's $812.50. So that is what I'm reviewing now. So this one is the first trade we made for $450. So it calculates based on of the number of ticks that I'm having now. In CL, in crude, it's 760, and in gold is actually 260. So let's see if this is correct. Let's see if this is correct. Then yeah, it's the total is $1,300 today. 8 winners, 4 losers with 12 trades, and there's a scratch here. There's a scratch here that I didn't. There's a trade here that I didn't make any money on it. Okay, so let's go back here. So this one is it triggered and then reversed and stopped, and then you know, this trade it was kind of like revenge kind of trade. I took this one in an entry because it was crossing the moving averages, came back and stopped me out, and then came back down, and I took a second entry right here. I believe that I said that I took this one first. No, this one is the first one is actually back here and immediately went down. Now we do have a pivot right here, right? So let me paint that pivot. So there's a pivot right there, right? So it's riskier to take it over there, but I took it because it was crossing the moving averages. Immediately I was punished because of that, and then I took this week out of the moving averages here, and then I was punished once again because there's some good resistance right here. In fact, you see here that there's a double bottom right there and moved up to the other side and made a lower high right there. Okay, so I'm back. I had a phone call, so I had to pause the video for a couple of minutes. So okay, so here we do have where we were. Okay, right here. So this is the second entry right here. It was breaking out of this support or double bottom. I took that entry as well, and it didn't. And this was right after the market opens. It's always, you know, when the market opens, you know, moves up and down. So it's you know, there's a lot of traders that are going or there's a lot of volume. Let's put it that way. That sometimes make it harder to trade. So what happened here is that you know, was breaking out of this support here, and then I took the trade right there, went a couple of ticks, and then reversed reversed there. So the third trade in this one was also a loser. So I do have $450 loss on the second one, and on the first one, another $250 on the second one, and $250 on the third one. Okay, so these are the three trades I made right around the open or before the open. Okay, now what happened here is that this is a failure, one of those good trades that you would like to see. So moving averages are all down. Okay, so let's review this fourth trade. So we have 1, 2, and 3, and this one is the fourth one. So here there's a first touch and out of the a cloud and out of the moving averages. So the cloud, you have it up here, then made a wick out of the 30, out of the 200, the 89, and the 32 and the 21. All of them were stuck to the downside, and then I took the trade right there at the end of this break. All right, so came back down 1, 2, 3, 4, 5, took my $200 target, and then reversed, and they came back to the to stop me over there. So that one there was good for $325. Okay, so first trade in a profit I have in there. Here is a good setup as well. You have let me paint this one so you will see. I'm gonna do it with this. Yeah, sorry. I'm gonna do it with this path here. So basically what you have is this formation. So you have something coming down right there, up here, down there, make a higher high there, but it's still lower than the previous one there, and then came back down there. So basically let me see if we can put a different color here so you can see it better. Green, and I'm gonna put the width in 5. Okay, so here you got this formation here. This one is a failure basically. So you are up in the resistance area. Remember, we want to be short. The bias is to the downside, and we are trying to look for bearish trades. So here you have a failure. The bullish guys are trying to move up, and then they move down. I did not take this trade. Probably should have, but I did not take it. So this one is a good setup. Probably the entry would have been either there, or you want to wait until it goes below that support right here. Better if you do have 2 or more touches on this support here, but this one right there is a valid entry. Now market came back down and then move up, and then I took this one once. It took me a little bit longer because the price was not above the or below the moving averages, right? So price was here was in between, then here was kind of like crossing, but this one is the one that really crossed. So what I did was to wait until that one closed, and I put the entry right there. So this one was good for $200 right there, and then came back up. That one is $375 profit on this one. Now again, we are bearish, right? We still are bearish. So the bias is to the downside. So another trade here. There's the market moved to the upside, make this very nice and healthy move to the upside. But since I'm biased and to the downside, I'm looking for resistance areas right there, right? So let's put some resistance areas. So okay, from yesterday we do have, or from the overnight actually, what we do have, let's paint a box here. So that one is, I'm gonna use one of my templates. So in that way, I don't have to. I put as template, so I don't have to paint them every time and go to the settings. So I'm gonna load this rectangle red, because red for me is resistance. So I'm gonna apply it there, and then I'm gonna say, okay, so there's resistance up here. This is going to be in my radar all during the day, and then if I take this one and Control C, Control V, move it down here, I'm gonna say because in pre-market also they made some good resistance or range in this area here, touched, so that one for me would be a resistance as well. And so yeah, right there. So if I go get close to this area, I'm looking for setups right in close to resistance. In this case, not totally in resistance, because I'm if I keep waiting and never touches there, then I wouldn't make any trade. So, but basically what happened here is another one of these formations. This is a trap as well, exactly the same as I painted before. So let's go and do it this way this time. So market made a move right there, then came back down, and then moved up. Sorry, this one goes there and then move down, right? So it is the same. It was more clear with the other one, but basically you see that there's a trap right there. Went to that little higher low, and then I took the entry right there. This one is a reversal, or not a counter trend trade. It's on the direction of the overall direction of the market. But in the trigger chart, it's actually a reversal. I'm against the trend. Now this one here was also profitable on the first contract, so met the $200, sold the $200, and then reversed and made a little bit of more money in the other one. This one was, and the second one was 100 or one tick right there. I'm talking about this one here now. Okay, so 375 211. I believe that one is. I have to start putting the time, because I sometimes I get lost on that one. Okay, but here we do have a reversal, a counter trend, one good for one target, mid there, and then try to bounce up. I'm not looking for long trades here, because I'm bearish. So this one I'm out. I didn't take any. Now let's look at what happened here in the anchor chart. Would be interested to know. See, direction of the anchor chart is moving down, and all of these things that are trying to go to the other direction are noise, basically. Okay, so this is noise, and even in high volatility markets, you get some really good noise here. So okay, so took that trade. That one here is a break out of this, or a continuation out of this resistance. So you see that it's crossing the moving averages to the downside, and then it's breaking out of. Let me see if I can. And sometimes I think that, let me know if in the comments if I'm doing a good job on showing this, because sometimes I know what I did, but sometimes explaining it for me it's a little bit tougher. So basically, there's a low, a high here, a low, then a lower high. This is a pivot, and then comes back down. Now at this point I know that the market is going to make a lower lower low, right? Because I'm crossing this prior pivot here. Now what is going to be the initial the end target? Well, my initial target is the $200. The second target is $400, but not $400. I'm sorry, 2 points or 4 points. It's more than $100. Or than $200. Okay. Anyways. So the first one triggers. The second target, or the runner, would be probably the prior low here, or the other side of a channel if you're trading with a channel here. Okay, so okay, took this one. I did not take the where am I? Yeah, again, there's another very similar to this one here. That's why I got and there's another trade right there, very right there. This is a really good entry as well. I did not take it. Okay, so here you have one target that could be down, and then I would be probably stopped in here when it was trying to move to the other side. Anyways, came back down, met this 30 minute. It's 10:22 right there. Made an attempt to break the 30 minutes channel. Normally I don't take the first attempt, and that is because why? Because you get the initial range and then move up, and then it failed up here. You see that fails a lot of times. So what I do is to wait for a second or third a break out of this 30 minutes range, and then I take the trade. So I took it right here, and this one was good for one target, and that one is $362. I'm sorry, $375 right there. That's fine. Now I do have here a pivot low, a higher pivot right here, and the market has started to range. Now I took this one right there for a break-even trade. Why? Because I thought that, okay, this one is going to keep moving down. It did move down, but it was kind of in a range. We are we are not expanding, we are contracting in here. Still we are bearish. I'm only taking bearish trades, and then the market came back up, made this similar low, make this in this case, the market went up here, tried to make one, and twice tried to go up here. A good entry would have been right below this two lows here, right? Below this double bottom basically, and then the entry would have been there for a good trade. Now it's 11 and I was doing something else, so I did not take that trade, and I remember vividly that I was doing something else, and that was the last trade I made in ES. Hopefully guys, you find this video good for you. So hopefully you enjoy it. Okay, so let's see the trades in crude oil. I'm gonna go to crude oil. Okay, and let's do kind of the same thing that we initially did. Okay, so what I am in crude, let's put the vertical line here at crude opens at 9, but I get here at 8, so right there. What do you see here? And this is where I'm gonna give you a tip on how to customize this. So first of all, you do have here a Darvas. Okay, so the Darvas here is painting the pivot high and the pivot low on this point and figure chart. Now, am I bullish or bearish here? I'm nothing, right? What happened in the day before in crude? Basically, nothing that much, moves ups and down. It's bullish, but it's not doing that much. And now in the overnight, it's sideways. Would you agree with me that this is sideways? So from that point here, overnight. Maybe a little bit there. If you take the 5 p.m. market or 6 p.m. market, you know it's moving up. It's not sideways, but yeah, I would say that it's sideways. So basically, what I do here is to put a modified Fibonacci retracement. So let's do that. So go here, and I'm gonna tell you how do I set up this. So I look for, you know, tops here. So I believe that the most tops I find are around that area, and then I moved down and look for support, and I'm gonna paint it around that area. Okay, so let's go now to how you set this up. So this is the and there's a question in the reason why I'm doing this is because there's a question on the previous video, and they asked me how I set it up this range. So basically the range is down here, and then you have areas of resistance up here and areas of support right down here. Now I'm bullish overall in the market. I'm bullish in crude. So my bias is in crude is going to be kind of a little bit to the upside, even though I see a range here. Okay, so in here, so I do have it at 40%. If you reduce this to, let's say, 10%, then apply it, then you will see that the shade area is going to be shaded. Yeah, so I'm gonna put it back at 40. So that is one thing that you can do. And then here, if you go to the price levels, what I do have here are these price levels. So I do have 0, 300, 200, and 100, and then to the other side I do 100 and 200. Okay, so what happened here, if you see, and I'm gonna go and see in the 100 I do have transparent as a color, and then in the 200 I have it in red. Okay, in the 300 I have it in red. So in between the 200 and the 300, this is my zero line right here, down below here. So in between the 200 and the 300, if it's in red, then the area is going to be shaded. Okay, opacity 100%, and then here 0, that one is the dark gray line that you have there, and then 100 is it's a transparent color, and then the 200 is green. Okay, so that is how it is set up, and if you have any additional questions, let me know. I would be glad to clarify it. But it's pretty simple, right? Okay. So what do I do with this? Now, in here, I'm at my assumption is that I am at resistance areas, so I have to be careful in how I take the trades. Now, one more thing I'm gonna do here. To select it, you have to go to this little thing, and then I'm gonna make sure that it's in all charts, because in that way I can see what happened in my tick charts and also in the Renkos. Okay, so you see that there's try to went away of the resistance area, but then came back down and moved to the support area, right? So where am I? Where are we now here? In the resistance, in the support area. So we would expect that this is going to go to the gray area. This area here is the magnet. So this one is actually an area that the price wants to go if you're in the range, is right the center, and then you have some deviations, you know, to support, to resistance and support. Okay, so let's see where the trades are. Okay, so we are right here. Let's see. Oh, I'm sorry, I'm in the 2 tick chart and I'm trading the 4 and the 8. Okay, so trades are right here. Now, I said initially that I am bullish still in gold, in crude. Should I be? Maybe not, but I am. So what I was expecting in this initial trade is that, you know, this is a very neutral range, but I took this break, okay, out of this resistance here. Why? Because after I painted, because I painted here, if you see the Renko chart does a pretty good job also in respecting this shaded area, right? The gray shaded area, and then came back down. Supposedly you should be okay by, you know, trying to buy here and sell up here. I didn't, but then I saw a continuation of this move, and then I took the trade right in there, and the first target was here for $200, and the other target was here for $400, so $600 in between the two contracts, and this was good. I mean, it went all the way to the upper side of this area and then came back down. Now came back down here, and I took the trade here. This one is not a good entry. Let's see what I did here. It's actually a short. it's a short entry right here. It's yeah, it is in the higher in the resistance area, trying to move forward, but it didn't have any wick or anything. It just was an impulsive trade, because I was thinking, okay, it is breaking out of this. I missed the first entry. I'm gonna take it here. It's in the cloud, and then came back down and hurt me right there. So this one is $440 loss, and then came back down and touched the gray area right there. Look at that, beautiful. And then went up, and then made I missed this move, because once you are in the gray area, you could take this one. Now you would be below the cloud as well. So here we have the cloud, and then I took that entry right here. And then that was why I took it. There's a couple of things here. We have, if you see, let me paint it here. Right there, you have R1. Okay, you see that? R1. So that one was my trigger. I'm looking to justify why I took it, right? But I took it right there. So entry at 123.13, first target out right there, just below the opening range. This one is from Crude is from 9 to 9:30. So then the second target was right there. I mean, the second target was kind of like to the tick, to the second target. So yeah. And then no more trades. So 3 trades in 3 trades in Crude. Let me show you that. This is my registry right there. Okay, so 3, 440, and 600. 6, 440, and 600. 3 trades, and the total of that one was $760. And then the market started to range here. Now what we are looking for here are shorts, right? And then the price would need to move to would tend to go to the range area right here, to R1. The thing is that, it was kind of clear that it was going to do that. There was support right down here, resistance up here, and try to go, failed. And when that happens, when you're in a range, then most likely it's going to come down. And sure enough, it came back down, and came back down. Now it's looking for the resistance area, the support area, and you see that found support right here, and now it's staying at support. Most likely this is going to go up. Okay, yeah, so that is Crude. Let's review a couple of trades I made in gold. Okay, so gold. Again, let's go there. What do I see in gold? Let's look for the vertical. Gold open at 8. I'm looking at the market at 8 a.m. Oops, somewhere around there. So what do I see here? It's clearly bearish, right? But in here I saw this channel. So I'm going to enter a fib from there through here. Now the market, if you see, the market continued move down. Oh my God, I'm sorry. I was looking at a different date yesterday. Okay, so let's put this one down at 820. Okay, so let's see where what I saw here. So we're up, down. I think that that is where I marked the in here. There's a range right there. So yeah, I think that this is fair to put it that way. Okay, so I'm in a range. Remember, I'm looking at this only. I'm looking at this only. Okay, so you could argue that this one is going down. It certainly is, but this is the range I defined, and then for me that was a kind of an overshoot. Came in the range when it was going to try to stay there, and then comes down, and because the bias on this one, even though it's in a range, is still to the downside. Why? Because it's entering this channel. It's entering it from the upside to the downside. So what it does is to, you know, come down. Let me put it here. So it comes down, then moves there, and then it could either do a couple of things, go to the upside or go to the downside. Most likely it's going to go to the downside. Why? Because it entered this channel. It entered this channel here from the outside in and was going to try to go to the downside, and then you know, it is going to try to reach upper or higher levels and fail and come back there. So that's the thinking here. So you have a resistance area here, a support area here, and so the market is going to try to go up again and stay in the range. That is the thinking behind it. Okay, so so you see now we are at support. Now do we put trades here? Well, kind of like iffy. Why? Because you know, we are late in it's 2 p.m. There's some you know, time in the market, but you know, trades in crude and well, crude would be kind of okay, but trades in gold in the evening are not my favorite. Anyways, I could be wrong, but I don't put trades in there. So let's look at the trades for gold. Now that I fixed the timeline, right? Okay, so now let's see, where are these trades? So let's so first trade in gold was before was at here. Let's see, am I in the right 822? Yes, 2 4. Okay, that way better. Okay, yeah, something was not right there. Okay, so here, what do we are looking at congestion. Okay, mistake here. My thinking, well, not mistake, but what the market didn't do what I thought it was going to do. So we are in the range, moved already down before the market opened. Market opened at 820, then it made a move to the upside, then moved to the downside, and then I thought, okay, we are. And this is I was you know, looking at this range gray area, and I thought, okay, it's going to move to the other side of this range, okay, and it did not. There was some resistance in the 200 moving average, in the 99, and I mean, everything is stuck to the downside except to the downside. The cloud is below me, but it's a congestion area. We are not but anyways, this was the entry. I was thinking, okay, I want to go there from here. Okay, so it didn't work, came back down and stopped me out, $360 lost, and then it came back down, and I was thinking again, okay, you did it for so it stopped me out here, okay, and then came back down, didn't work. So I was thinking, okay, this is not when I want to go to the support area, to this side. So I changed the direction, and then I put the entry right there in this candle below there, below in here, right, and then came back down. And this one was good for the first target was met right down here, and then came back and stopped me out. So on this gold, these are the two trades. The first one was for $200, the second one was for $100, so a total of 100. So in between the two of them, the loss today was $260. Okay, so total is 12 trades, $1,300 profit. And there's I do have a little bit difference with in between that and my P&L record for Apex. So I'm not. It's about $50 to $80 difference. So I don't complain. Anyways, right now you see how it works on the range. Came back down, stay in the range, came back down, and now it's in support. I would expect that this one is going to move up. One additional tip. I'm sorry guys that if this video is too long, but I want to take advantage of the most I can to tell you what I'm doing. This is what I have in Thinkorswim. Okay, this is one in my it is in my chart. So what I do have here is the daily. So what I look at always in NQ. I want to trade NQ, but NQ I'm not feel comfortable yet to doing it. So if I make trades, I do it in Sim. But in that I do have ES, GC, and CL. You see, let me enlarge this one and we move and see what the daily is telling us. So daily is telling us in the ES that we are bearish. Any surprises there? Maybe not. So what happened is that it was in this portion of the, so initially what I did have is that I'm going to activate this 1 second, and what I did have was a channel painted like this. This one gave me a good entry right here. So to the downside it touched, but then it broke, and now from there what I do is to go and connect to that higher area there, or better yet, instead of this area here, if you see, if I move this channel and touch with the middle line right there, I touch it there, and then this is the area that I'm going to look for shorting. So this one is a short trade, and it keeps shorting. Where's the target? Well, right here. Okay, so let me paint it there. Right there is my target. We'll see if it's going to do it or not, but you know, I'm bearish ES. Yes, I'm bearish ES 3 days in a row that it's coming down, and what I have here is the range of the first day. So my bias is below that. It's bearish. Let's look at gold and See, gold made a big move yesterday, kind of like the same thing, you know, you connect this one to this one and then go up here, connect that one, and that is your touch line. And then below the opening range of the day, the month 6-1, and then it's moving down, you know. So that's what I see. I'm not inventing anything. Just that is what I see. And then crude is bullish. Now it's same thing, right? Now I'm touching this up highs here, and then I'm looking for this touch here. Where I'm gonna be, you know, absolutely bull again is in this area. And then you see here that you have there you have the 30 SMA simple moving average. I do in the daily, I do use the 30 and the 10 simple moving average in there. So there is also a price that was violated, but then came back down to the range right there. So what I'm looking for now is this pivot here, and to see if if it's going to have either a reaction there or a reaction here, but closer to this a lower part of the channel. So that would be crude. Sorry, I'm gonna delete this. Okay. Now the other thing that I have here is the 4 hours, right, charts. So these are 4 hours charts, and then you see that I do have another one. You do in Thinkorswim, you can set up as many different templates for your drawings as you want. So I do have 15 minutes, 1 minute, 2000 tick, daily, monthly, non, Renko, weekly, Fib. What I do have is in this particular case, I do have the default, which is kind of my daily, and that one replicates to others. So here we are at the resistance, the resistance, but we are moving down in this channel. So my expectation in the 4 hours is that it's going to keep moving down. Yeah, so 1 day, 4 hours, and I do use the 30 minutes, and the 30 minutes I put it in NinjaTrader. So if you see here, I do have the 30 minutes right there, and the 30 minutes on ES, it's bearish, right? I mean, it's not, the range is not that big, right? But it's bearish. I mean, it's moving, it's below all the moving averages, and you know, yeah. Anyways. All right, guys, so it's gonna be all for today. I had to stop the video a couple of times, so I have to put it all in one, and I'm gonna publish it there. Again, if you like the video, please hit the like button, and that would help me a lot to reach additional people. And if you have any comments or suggestions, please put it in the comments. Thank you so much for watching.